Hi everyone, and welcome back to the Gold TLDR. If you were watching the charts last night and saw that move in gold and silver, your heart probably skipped a beat. If you're currently bag holding at the top, or if you're one of those brave souls trying to catch a falling knife, please take a deep breath and watch this video to the end. This wasn't just a normal pullback, it was a total bull trap and a massacre, a perfect storm that shook even the most seasoned Wall Street pros. Did you notice the market yesterday was more dramatic than a Hollywood thriller? Gold and silver pulled an epic high dive, a crash so brutal it felt like the infamous silver collapse of 2011 all over again. Let's recap this heart-stopping chain of events. During the Asian session, gold looked ready to moon, smashing through record highs to hit $4,550, with some exchanges even wicking up to $4,565. The hype was unreal. Everyone thought $5,000 was a sure thing, but out of nowhere, the party ended. Gold fell from the stratosphere to the floor, plunging relentlessly, slicing through support levels like butter, and finally bottoming out near $4,300. In just one day, gold wiped out nearly $200. To put that in perspective, if you were long just one gold futures contract, your entire margin would have been toasted, and you'd likely still owe the broker money. Silver was even more insane, a total roller coaster. In Asia, it hit a record peak of $83.75, with some data showing a brief spike to $84. The bulls were literally popping champagne. Then, it went into a vertical nosedive, crashing all the way down to $70.50. Do the math. That's a drop of over $13, a staggering 15% plunge from top to bottom. This kind of heaven-to-hell move, I bet a lot of traders who FOMO'd into the breakout are staring at their screens in total shock right now, completely numb. So the big question, does a $200 one-day crash mean the selling is over? Is there any hope for silver to get back to $80 soon? What actually happened behind the scenes? By the end of this video, you'll have a much clearer picture. Before we break down this financial wreck, here's the usual disclaimer. Markets are unpredictable. Everything I say is just my personal opinion and isn't financial advice. Always do your own research before hitting the buy or sell button. One more thing. If you're a day trader, flexibility is your best friend. Never get married to a position. In crazy markets like this, knowing when to cut your losses is how you stay in the game. If you're a long-term hodler, you need a different mindset and honestly, nerves of steel to handle these deep-to-the-bone corrections. All right, let's head to the battlefield. We'll start with the technicals to see how this horror story played out. Actually, the warnings we gave in our last few videos are coming true step by step. Mr. Market just gave us a very painful lesson. First, look at the daily gold chart. Here's the deal. The rising wedge we've been watching just confirmed a classic reversal. For those new to TA technical analysis, a rising wedge usually shows up at the end of a run. It means the bulls are gassing out like a runner who's still moving, but their legs are shot and they're about to collapse. We also saw a bearish divergence on the RSI. Look at the chart. Gold was making higher highs, hitting 4,550, so the RSI should have been making higher highs too, but it wasn't. The RSI peaks were actually getting lower. When price goes up but the indicator goes down, that's a textbook divergence, and it's usually bad news. Yesterday's crash sent the price from the top of that wedge straight to the bottom floor at $4,300. Keep in mind, 4,300 isn't just a round number. It's also the middle band of the daily Bollinger Bands and the 20-day moving average. This is the line in the sand for the bulls. If we break 4,300 convincingly, the reversal is confirmed. Sell orders will flood in, and the next targets would be 4,250 and 4,200. Of course, after a drop this steep, we're a bit overstretched, so a small bounce is possible. Immediate resistance is at 4,350, then the 4,380 to 4,400 zone. As long as we stay below 4,400, I'm staying bearish on this reversal. Now that we've seen the gloomy gold chart, let's look at silver. On the hourly, the key support is the $70 to $71 zone. If $70 breaks, there's not much holding it up. It could be a free fall. If we get a relief rally, expect heavy resistance between $74 and $76 to cap the move. Enough with the charts. Let's talk fundamentals. If you hadn't checked the price and just read the news, you'd think gold was going to $5,000 today. Why? Because the world is basically on fire right now. We're seeing a ton of bullish news. Any one of these headlines would usually pump gold by $50. This is what trips up new investors. Why is gold crashing when the news is so scary? Let's look at these geopolitical powder kegs. First, we had shocking news from Russia and Ukraine. Reports claim Ukraine launched a massive 91 drone strike inside Russia, with rumors saying they targeted Putin's residence. Zelensky denied it immediately, since that's a massive escalation, but the news had already spooked the markets. Interestingly, word is that President-elect Trump is fuming about this. Why is Trump upset? He promised to end the war in 24 hours. If Ukraine takes a shot at Putin personally, it ruins any chance for a peace deal and makes things way more dangerous. This breaks the Trump wins, war ends theory. That uncertainty should have been jet fuel for gold, because investors love gold when things get messy. Then, the Middle East. Trump met with Netanyahu at Mar-a-Lago, and you can bet the energy was intense. Trump took a hardline stance on Iran's nukes, even implying he'd support a lightning strike by Israel if they crossed the line. This is serious. If that happens, we're looking at a total regional war. War is usually the best thing for gold prices. Finally, China started new military drills around Taiwan, dialing up the tension in the Far East. With all this chaos and a relatively weak dollar, logic says gold should be mooning. So why did gold tank and silver go from a spike to a total dump? It seems backwards, right? There's a hidden truth here, and it's the main takeaway for today. This was a chain reaction caused by the CME margin demon. In yesterday's video, we warned you about a huge bearish factor, the CME, the big exchange, raising margins. Many people thought it was just a boring rule change, but it was actually the first domino in this crash. You need to understand how this works so you don't get caught next time. Raising margins means the exchange thinks the market is too frothy and risky. They basically force everyone to put more cash on the table to keep their trades open. The CME announced on December 26th that starting December 29th, they were hiking the cost to trade gold and silver futures. For traders who were maxed out on leverage with no extra cash, this was a total nightmare. Here's how the carnage happened. First, when margins go up, brokers check your account. If you don't have enough cash to cover the new requirement, you get a margin call, an urgent demand for more money. But yesterday, most retail traders and aggressive funds were tapped out. If you can't pay up immediately, the broker doesn't wait. Their system automatically force liquidates you. They dump your positions at whatever the market price is instantly. This creates a de-leveraging spiral. Step 1. The traders with the least cash are forced to sell first. This starts the downward move. Step 2. As the price drops, the traders who had a bit more cash now see their accounts shrinking. Since futures are marked to market, settled daily, a price drop creates instant losses. This triggers a second wave of stop losses and margin fails. Step 3. More selling hits the tape, and the price tanks further. Panic sets in. Nobody cares about the news anymore. They're just watching their balance hit zero. More margin calls go out, more people are forced to sell, and it becomes a death spiral. That's why it dropped so fast it was just computers smashing the sell button. It's like a crowded theater where someone yells fire. People don't walk out calmly, they stampede for the exit. People get trampled. This kind of mechanical selling doesn't care about Trump or Putin. It only cares about one thing. Do you have the cash to keep your trade alive? To make matters worse, the timing was incredibly sneaky. Look at the date, December 29th. It's right between Christmas and New Year's. The big Wall Street whales are on vacation. This means liquidity is extremely low. In a thin market with very few buyers and sellers, a big wave of sell orders hits way harder. It's like throwing a rock into a tiny puddle instead of a lake. The splash is huge. The same amount of selling causes a much bigger price crash when nobody is around to buy. So, the margin hike was the match, and the low holiday liquidity was the gasoline. That's why silver dropped 15% and gold lost $200 in a heartbeat. The big picture story didn't change, but the market's plumbing broke. I want to hear from you. Do you think $4,300 will hold? Are you buying the dip or staying on the sidelines? Is this just a shakeout by the big players, or is the bull run over? Let me know in the comments. Finally, let's wrap this up. The big reasons to own gold, like de-dollarization and central bank buying, haven't gone away. Gold is still the ultimate safe haven in a crazy world. One bad day doesn't change the long-term trend. However, in the short term, we have to respect the risk that this correction could go deeper. To sum it up, this year-end crash was a perfect storm of margin hikes, shifting politics, and some surprisingly strong economic data. Whether you're a day trader or an investor, keep a very close eye on $4,300. If that level fails, this fire could spread a lot further, maybe testing $4,200 or even lower. One last reminder, trading is risky. Always use a stop loss. With volatility this high, trading without a stop is basically financial suicide. Protect your ammo so you can live to fight another day. If this analysis helped you understand the why behind the move, please like, subscribe, and hit that notification bell. This is the Gold TLDR. See you in the next one. Later.